This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston and this is the international edition from interest.co.nz, and today we lead with news markets are starting to price in the return of US inflation in 2025 and perhaps the end of US Fed rate cuts, although there still could be a last hurrah in December. In the US, the CPI inflation rate rose to 2.6% in October from 2.4% in September. This was the expected rise, but it's the first rise in 7 months. In March, it was running at 3.5%. Energy costs fell in October, but by less than expected. Rents rose 4.9%, food inflation slowed to 2.1%, and transportation, basically airfares, to 8.2%. Prices continued to fall for new vehicles, though. The closely watched core inflation rate held at 3.3%. Given that the new US administration policies are expected to be strongly inflationary, the US Fed will have a challenge on its hands to retain the gains they've won post-pandemic. But it seems that markets are still pricing in the US Fed to cut rates again when they next meet on December the 19th, New Zealand time. After falling in each of the past 6 weeks, US mortgage applications were little changed last week, to be little changed from the same week a year ago. We should probably note that during all of October, they fell 35% from the prior month. And more falls are anticipated because benchmark interest rates are rising quickly now in anticipation of that resurgence of inflation in 2025. At least that is what markets are pricing. US household debt rose on a gross basis to $17.9 trillion US dollars in the third quarter of 2024, and half of that increase was in mortgage debt on rising home loan rates. Delinquency rates edged up marginally, but remain historically low. Across the Pacific, Japan reported rising producer price inflation, with PPI up 3.4% in October, the highest since August 2023, and the 44th month of PPI gains. In India, they had record passenger car sales in October, helped by unusually having 2 major festivals in the month, each with a history of high consumer spending. Although it is now slowing, wage cost growth in Australia in the September year was up 3.5%, a cost pressure on business that isn't being matched in output prices or rising productivity. It is the expected moderation, but they need it to slow much faster, or there'll be growing economic issues. The US Treasury 10-year yield is now just on 4.45% and up 2 basis points from yesterday. And the price of gold will start today at $2,589 an ounce and down $10 from yesterday. Oil prices are 50 US cents softer at $68 a barrel in the US, while the international Brent price is unchanged at just on $72 a barrel. And the Kiwi dollar starts today at 58.9 US cents and down 30 basis points from yesterday as the US dollar rises further. The inflationary effect will now start to appear on imports because it has fallen 7.5% since the start of October. Against the Aussie, we're 10 basis points firmer at 90.8 Australian cents. Against the euro, we've slipped 20 basis points to 55.7 euro cents. That all means our trade-weighted index starts today at just on 68.6 and down 20 basis points from yesterday. And the Bitcoin price starts today at $92,520 and up another 6.2% from yesterday. Volatility of the past 24 hours has been very high at just on plus or minus 4.2%. The price in New Zealand dollars has now exceeded $150,000 for the first time. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.